Oil prices are higher today as we got this headline. Biden says that the U.S. is discussing Israel striking Iran oil facilities. Now, of course, any sort of headline like this is going to cause a big reaction in the markets. Let's take a look at those oil prices. I pulled up a 5-minute chart just so we can see this is when that news came out. A huge pop in the price of oil on the day. At the time of recording, up almost 3%. At one point, it was like 3.5 or so. So big pop in oil prices off of this because discussing the possibility of a retaliation between Israel and Iran definitely has the potential to really move market prices. Now, remember, this is introducing a potential supply issue to the oil story. If there's only so much, oil being produced out there, and this is my teardrop, pretend that's an oil barrel. If there's only so much available and the supply of this goes down because, of some sort of attack or some sort of boycott or limitation of production, anything like that can cause the price of these things to actually go up. At the same time, here is a 5-minute chart of the S&P 500. At the time of recording this video, it is down about 0.5%. NASDAQ down about 0.6%, 0.7%, and the Dow Jones also down as well. Now, what you'll notice on all these charts is that there was a pop that preceded them, and I want to talk a little bit about what we saw this morning on the economic data front. With all this craziness in the markets right now, there's one thing you want to make sure there is no craziness on, and that is your brokerage. If you're outside of the US and looking for a better brokerage, today's video is sponsored by Vantage, which I encourage you to check them out using the link in the description down below. Vantage allows traders to trade everything from CFDs to Forex to commodities and all sorts of other different things. So if you'd like to trade with Vantage, there's also a special welcome bonus that is available to my subscribers, and you can get access to that information by using the link in the description below. So this morning we got the ISM Services PMI number, and it came in higher than expected at 54.9 compared to the forecast at 51.7. This was very good for the US dollar, and the stock market also took it as a win as well. What is this number, by the way? This is basically outlook from purchasing managers in the services component of the US economy, and their outlook was positive. Their outlook is not only positive, but very positive relative to what the index was forecasted to be at 51.7. So we were expecting growth, but now we're expecting even more growth when asking purchasing managers across the nation in the services part of the economy. And again, back to our 5-minute chart, at that time, at 10 a.m. when that number came out, we saw the NASDAQ pump to a high of the day and then proceeded to fall from there due to the kind of breakout of this news happening in the Middle East. So it's been a tricky time in the last few weeks with the markets because you're getting economic data that comes in one way and then something happens in the news that causes the markets to reverse. And the long story short here, in my opinion, is if we remove our feelings from the situation, typically, not always, but often enough that's worth mentioning, political stuff, debates, war concerns, usually they have a big pop one way and then they fade back the other. And that's just because people get very fearful. They slam the sell button or buy button very quickly, and then the market kind of stabilizes and resets. And again, that has nothing to do with how I feel about the situation. It's just an observation in markets. Typically, markets will flush the downside and then reverse quickly, and vice versa. Oil prices might, in my opinion, I would be more surprised to see oil prices higher by the end of the day than I would to see oil prices fade by the end of the day. Now, that being said, markets are very unpredictable at times. We could see things escalate much further and actually oil prices could launch much higher, and I could be completely wrong in that. But if I had to, make an educated guess, I would say that stocks rebound because we had good services PMI data, and that the fear around what's happening in the Middle East is going to be just a short-lived thing in the stock market. Again, that has nothing to do with how I feel about that situation. Anything happening in the Middle East is right now very sad to hear about. From strictly a market's perspective, though, typically the move is sort of a not long-lasting one. So my view is I'm staying long in the NASDAQ. This number here this morning was very positive. Services PMI, great figure for my opinion of where I want to be with the stock market. I would be more concerned if we see price action disagree with me. If something happens in the Middle East that causes a bigger push to the low, then perhaps, the next area here of support could be 19.4. If that breaks, then maybe we've got trouble. But for now, I'm staying bullish. And specifically, some of the names or areas of the market that I like are things like semiconductors. SMH is a position that I currently have on. This is the semiconductor ETF. Think NVIDIA, Broadcom, Qualcomm, all the different chip manufacturing companies. I do have a position on this one and stop loss below these lows. So if the market does tank, then semiconductors likely will as well, in which case I would take a loss on this one. But I do think that there's more potential for upside than downside. If I'm wrong, then I'm wrong and I stop out. I'm working on a pretty large capital basis, so don't let these numbers fool you. I am not massively leveraging my account. I am, still being prudent with my risk management on a percentage basis. And if you trade Forex or gold, silver, stocks, indices, then you might want to join our Discord because we trade a little bit of everything. I trade FX, ETFs like the one I just mentioned with SMH trade. I share all of those notifications as signals to our members. If you're not a member of our group and you would like to get access to those, you can get access to both my good ones and my bad ones. I'm not going to show you I only take wins. I took a loss in the pound yesterday, but I've got several trades that are now in the green that I've been taking this week. With NFP right around the corner, it is a great time to join the group. And if you'd like to get a special discount, send us a direct message using the first link in the description down below. We'll tell you about that. And you get access to the group for a nice subscriber discount. Come join us. It's a great time to join, and you can get access to every trade that I'm taking with full breakdowns, screenshots, analysis, and much more. I am also watching the Dow Jones. If we do see markets take a little bit more of a tumble, I do have some cash on hand. And what I mean by that is I use a stock brokerage, and in my stock brokerage, you buy shares. Now, I know some FX or CFD brokerage traders might be a little confused by this. I'm not using lots or anything like that. I'm buying and selling shares, and there is like cash sitting in my account that is not currently invested or in any positions. So with that available cash, if we see the market tank a little bit more, I may start to buy some stuff. I might start using that cash on things like maybe the Dow Jones, etc. And gold is still chopping around. On one hand, you do have geopolitical tension, which I think is a upward driving force, but at the same time, positive economic data from the US is a bit of a negative force. So it actually makes sense in my view that we sort of stay ranging until NFP, which may give us a bit more of a decisive move one way or the other. In fact, on today's live stream, I discussed gold in depth with relation to jobs data on Friday. So check this clip out. Anyways, let's take a quick look at gold as well. Here's gold on the daily chart. Gold is still just sort of teetering around up here. It popped a little higher off of the situation in the Middle East and the escalation we saw a few days back. That's following a big run up in the price of gold. So it didn't quite take us to new highs. And if we're taking a look at the daily chart price action, I would just say we are sort of consolidating at these levels and waiting for today and tomorrow's data points to tell us where the jobs market is at. So earlier I talked about labor market, right? Let's talk about jobs for a second and how it relates to gold. For my gold trading friends, and I know that is a lot of you, here's the synopsis on jobs data for gold. If jobs data is good, if jobs data is bad, let's start with jobs data is bad. If jobs data is bad, what happens? Well, the dollar probably goes down, probably weakens the dollar, and it probably causes a little bit of uncertainty for investors. And that is the perfect combination for potential gold bullishness. Dollar weak, uncertainty in the markets. Gold would then likely move higher. So perhaps on NFP day, if we're seeing, today and tomorrow, strong breakouts to the upside on gold on perhaps weak jobs data, that could be an indicator of potential bullishness above the all-time highs, right? So I actually don't shy away from buying all-time highs if there is a good fundamental and technical setup to trade. So I'll be looking for that. That's a scenario that I could potentially see getting long gold. Now, on the flip side, what if jobs data comes in really, really solid? Then we reverse everything I just said. And we said, well, if jobs data is good, the dollar strengthens and stability is reconfirmed in the market. Those two things are bearish for gold. Remember, gold thrives on uncertainty and weaker fiat currencies globally. So if we have good jobs data, the exact opposite scenario could play out. You could see a break to the downside on gold. That being said, there's a sort of weird third variable in this picture, which is geopolitics. So we have what's going on in the Middle East. unless some sort of resolution or some sort of positive news comes out of there, I think that also limits downside potential for the short term on gold. So even if you get a break to the downside, there's a bit of a premium that traders, investors are willing to pay to perhaps hedge their other bets by owning a little bit of gold in their portfolio. I know a lot of traders love to trade gold, but that's not what most people who have positions in gold are doing. Most people are investing, hedge funds are investing money into gold for one reason or another, but oftentimes it is to hedge geopolitical risk, and it is also to hedge perhaps all allocation being in stocks or bonds. So gold is this third option for a lot of long-term investors. So you have to remember, if the situation improves in the Middle East or something, those people might say, okay, that's gone. Let's go back into stocks. Let's go back into bonds. Let's get out of gold. And if things get worse, they go right back into gold. That's that dynamic. I know that, again, we all focus on trading gold, but the vast majority of actual money being traded on gold is like passive investment, people buying and holding gold or choosing not to. And as traders, we can take advantage of watching that flow. Thanks for watching this video, and on the screen right now, you'll see some other options of other videos we put together that might be helpful to you in your trading career. So thanks for watching, and we'll see you next time.